Hello, my name is Steve Bigelow with the Candlestick Forum. We had a very strong up day in the market. However, you've got to be a little bit leery of today's positive trading because it in the Dow and the S&P 500, this positive trading day was not a reversal signal. Remember the rationale that if this was some type of signal, the Japanese rice traders have had 400 years of identifying it and telling us what it means. When it's not identified, it pretty much tells us it's not a reversal signal. However, that doesn't negate the fact that you might see uptrend, but watch to see what the first resistance level is telling you. The other side of the coin is that even though it's not a reversal signal, it's a pretty good indication that the bears aren't in control, even though the bulls may not be in the control. That means some of your breakout patterns are going to work very well. So the more compelling sector or index was the NASDAQ. Notice it did what is a derivative of the bullish harami when both candles are the same color, but it's an inside day. It's called a homing pigeon, but it requires the same thing as a harami. It needs to open positive and trade positive, which it did. And you can see where the NASDAQ bounced right off the 50-day moving average, back up through the T line. So same scenario. We want to see what happens here at this level, at the resistance level. However, this might be more compelling as a reversal signal, which indicates that specific sectors like the high techs might be acting strong when the rest of the market may not be as strong. So one of your strongest breakout patterns or signals is the kicker signal. The bullish flutter kicker signal, as we see in Amazon, has a lower open, or I'm sorry, a candle that closes lower, creating a dark candle. The next day, they gap it up above the previous day's open. That is the first alert. We're going to be doing a training session that's free for everybody tonight on the kicker signals in our website. So come join us. I'll have the link in the text area where you can come join and watch kind of the logic of what the signals tell us. But notice what happened today. It traded positive going into earnings. Well, after hours, it got as high as 123 area. It's backed off a little bit, but as a trader, there's very good profits in that move. Same scenario here on Microsoft. Opens and closes lower, dark candle gaps up because of earnings. Now we have the very simple trading rules that if you have a doji, if it starts trading positive, the doji rule says it's going to move in the direction how they open after a doji. That means when it traded positive, if you took this little flutter out, you basically have a kicker signal, your strongest signal. So anytime you see a bullish flutter kicker signal, this is the expectation that you're going to have a good strong uptrend because there's been a major change of investor sentiment. We're also going to be illustrating the trend kicker signal. First Solar had a green candle, and the next day they gapped it down and went the opposite direction. It was already in the trend. They had earnings tonight, and they're trading down here. This signified the fact that the people that knew what was going on were selling it off pretty hard, making for a good short. Where would be the next target? There's a gap to fill down in this area. So if you're trying to trade earnings, sometimes it's better to wait to after the earnings report, as we see in Domino's Pizza, where the initial reaction was they took it up, and then remember, the bigger the signal, a big bearish engulfing signal, failing at the 200, failing to hold at the 50, implies there's a lot of sellers coming into this trade. So the pattern breakouts are very easy to identify, obviously, and this is the reason the chat room is so beneficial, because not only do you have people watching for signals and patterns, but they can immediately identify when one is occurring. So you had your kind of your fry pan bottom that bottomed right here on the 50 and then broke out. So here's the rhetorical question. You buy here, you buy here, you buy here. That's where candlestick analysis makes it very simple. You flip to your 10-minute chart. You could be buying here. You could be buying here. Maybe you're not buying here. You could be buying here. You could be buying here. And you might be taking profits up here and buying back on the close. Why is this relevant? Because that tells you they were still buying going into the end of the day, which is resulting that the current trading, even though it closed at the $20 range, is currently trading at $70. Now, the rhetorical question again is, do you always have big price moves based upon candlestick breakout patterns? Definitely not. Not as huge as this, up, I think, almost 1,000%. But it puts you in situations where you know exactly what to do, when to identify a breakout, and then what to do with it once it's in progress. So come join us tonight. The market, NASDAQ, is trading with better conviction to the upside, which means there's still going to be good trades on the long side as well as good trades on the short side. That'll be it. We'll see you in the chat rooms.